In this episode of Beginners Investing, I'm talking with the certified financial planner Nikki Dunn. Nikki is the creator of She Talks Finance. She's also a stock market investor and she's a co-host of the We Talk Money podcast. Before we get into the interview, which by the way is packed with great value for beginner investors, I would like to do some housekeeping. A lot of you have asked me when I'm going to post the next episode of this series. And it's been a little bit all over the place since the beginning, but from now on I'm going to post every first Wednesday of each month. And I know I have promised you guys to show you my portfolio, but please bear with me because the next episode I'm going to talk about the platforms and how to choose a platform. I'm actually struggling quite a lot to find a good investing platform in Europe that matches my criteria. I'm going to show you all of my research, guys, and I promise you next episode I will also show you my portfolio. Make sure you don't miss the next episode by smashing that subscribe button. And now let's start the interview with the most obvious and important question. What the hell is a certified financial planner? It sounds scary.
Certified financial planners are trained in every single aspect of somebody's financial life. So we're trained on how to handle things like cash flow and budgeting, insurance, making sure you have the proper insurance coverages. We're trained in taxes, making sure to help you strategize with taxes. And then we're also trained on investments and retirement planning, which is basically choosing the right retirement plan, retirement accounts for you, maximizing them, choosing between the traditional and the Roth IRA, kind of that strategy stuff. And then lastly, we are trained in estate planning. So we are, we have not a knowledge base on when somebody attains assets, even if they haven't attained a lot of assets in life, there are still things that need to be done to make sure that what you do have passes to who you want it to pass to successfully without having to go through a bunch of red tape, which is something we call probate, where you go to the probate court and then the court decides where your assets go. So, our goal is to try to help you avoid that as much as we can. And maybe you need a trust, maybe, you need to just set your beneficiary designations. And so we're looking at your whole financial picture from start to finish, guiding you through that whole entire process.
Wow. We have a saying here in Bulgaria, which is like when you go to the doctor, to the lawyer, or to the accountant, you have to tell absolutely everything. And it seems like this is the same with the certified financial planners.
Yeah. We got to know it all in order to be able to plan around it for you.
What got you into finance? That's something that it's really interesting for me because it's not like the most fabulous type of job. It's actually some kind of boring in most people's eyes.
Yeah. It's funny because I started kind of in the finance world very young. I did not come from money. I actually came from quite the opposite of a financially stable home life. So it was always something I was motivated to do, was be successful and find those ways to build wealth and figure out how people did it. So from an early age, I was always into this, but I was very young and my first major job was working at a mortgage company at 16 years old. So from a very young age, I was kind of thrown into the finance world, learning about mortgage interest rates, learning about actually, helped at a very young age. I worked alongside the woman that was putting out the interest rates every day and doing the rate sheets and, getting all the quotes and stuff. So I was doing that at a pretty young age in high school. And so that kind of threw me into that world and threw me into the business world. And that's where it all kind of started. But so my husband, Chris, him and I have actually been together since high school. And he brought me into the investing world. So he was a futures trader at the time. And he brought me into that whole side of things, which was futures trading education. And that's kind of where my investing my love for investing started and my love for trading started, and I just took it from there. And the rest is history. I also did a lot of things on the tax side, working with small businesses, helping them figure out, how to save on taxes with retirement plans, and working with accountants directly to make sure that the business was maximizing, every tax strategy that they could be. So that side kind of came into my lap, the tax side and the strategizing side. And then throughout the years, I was doing that as well. And then I got my certified financial planner designation. I actually passed the test last year, which was a huge accomplishment for me. It's a very difficult test, and you have to have a lot of finance experience to even be able to get the designation. So that's kind of my journey. It's just something that naturally I was drawn to at a very young age and kind of put into that world in high school, which is very weird. But I'm glad I did.
For a beginner investor, or actually for anyone as a beginner that wants to look into personal finance, how do I should choose a CFP? How can I make the difference between a good one or a bad one, in your opinion?
Yeah, so certified financial planners in the U.S., and I don't know specifically the details with financial planners that are in other countries, but in the U.S., a certified financial planner has a fiduciary duty to their clients. So that's why you want to find somebody with the designation, because they actually have that duty specifically to put your interest in front of their own interest. If they do not have the designation, they could, sell you insurance products that don't necessarily fit your needs, or sell you into a high fee mutual fund or something like that. And those are the things that consumers are becoming more privy to, and they're looking for. The other thing to look for in the U.S. specifically, we have a lot of financial planners that are actually focusing on not having minimums, meaning capital minimums. Like some financial planners, you have to have $150,000 or $250,000 in order to just work with them, and a lot of people just don't have that. And those are the people that really need that access to financial education and to sound advice. So a lot of planners now, financial planners, are actually taking clients on with no minimums. So find somebody, you can interview multiple financial planners, find somebody that, will take you with whatever amount of capital that or assets that you have, somebody that has that fiduciary responsibility to put your interest above their own, and someone that's going to, not try to sell you a bunch of high fee insurance and high fee mutual funds. It's good for the consumer, for the clients that are seeking this, to understand that those are the things that they need to be aware of and looking for. And when they talk to a planner and a client's like, hey, or a prospective client is like, hey, what do you think about high fee mutual funds or whatever it is, they can ask those questions. Or what kind of investments are you, thinking about putting me in, or what, are you focused on active stock picking, or are you focused on passive investing? My goal, and something that I'm pretty passionate about, is teaching people how to talk to other financial advisors and financial planners to make sure that they're not just completely in the dark. There are certain questions you want to ask. There are certain things you want to look out for. So definitely the designation, the certified financial planner designation, is becoming very popular, because the consumer can trust that the financial planner has their best interest at heart.
Well, the way I understand it is that the CFP is not commission based on the investments that you make with him or her, right? Or how are generally structured?
Yeah, it depends. And this is kind of back to that movement of planners nixing their minimums and trying to, attract or be there for people that really need it, that don't have a lot of capital. A lot of them are also fee only now. So basically what that means is they are not being paid commissions to sell you insurance and sell you, mutual funds or whatever it is. They're essentially fee only versus being sales commission based. So some certified financial planners absolutely can get sales commissions for certain things, but they still have to have your best interest in mind, and they have to be choosing suitable products.
I'm wondering, because I'm in the stage where I'm a complete beginner in investing. I'm educating myself, reading books, videos, and so on. Where do I start before the actual investing? Because as you said, this is the pretty part, like putting money into stocks or something else. This is what gets your high blood pressure. You get excited.
It's the exciting stuff.
Yeah, but where exactly do you start? Or if you're a beginner and you want to invest, what are the things you should look into before you even think about putting money onto stocks or something else?
This is something that I'm always talking about, is just try to understand the basics of what the stock market is, B, how it works, C, what is a mutual fund or an ETF? What is how does that differ from just buying a stock by itself? Those are the main things that you want to just learn about and why invest. That's the other thing you want to know, because a lot of people invest, they put their money in, but they don't really know what the money's going to, what it's doing. And they also don't necessarily understand how the market works in terms of market cycles. So when they see their assets, their values go down, they freak out, they sell, they get out, they get scared. But if you understand, hey, this is the long game, you're playing the long game here for your money to compound over time and grow. When you understand that, it helps you sit through those market cycles way easier and sleep way better at night. So understand why you're investing. And, this is why I have a program that I created specifically for people that are brand new to investing, to finance, period. And they may not really know where to start or how to make sense of it all. And so that's why I created this program to teach people from start to finish. Okay, here's the stock market. Here's how it works. Here's what an ETF is. Here, literally everything that you would need to know to begin your investing journey. Why invest? How to know the difference between a stock and a bond, and just multiple things. So that's something that I ended up creating because I was getting this question so often, and people just feel overwhelmed with it all. And that's the problem. So I wanted to create something to help people. And my YouTube channel also has free videos that I've been trying to put out to help people learn and get them more comfortable with certain topics.
I will link all your resources into the description down below. And based on your clients or maybe people that you talk to, what are the most common mistakes that you see with beginner investors?
So the most common mistake I see is people focusing on investing before getting their debts paid down, meaning their high interest debts. I'm not talking about a home mortgage or even a car note or a car loan. I'm talking about the credit cards that, have very high rates. So I see a lot of people that have this high interest debt, but yet they're still investing. That's all they want to do is invest. But when you think about it, your average return in the stock market, it can't be necessarily the interest you're paying on that credit card, that 24% interest. If you're making, 24% plus interest in your investments, then good on you. That's great. You're doing something right. But most people, they're just getting the average market return, annual return of 7%. So you have to think about that. So I like to tell people, think about those high interest debts, get those out of your hair. Then you can start investing with confidence and you can start really growing those contributions from there.
Okay, and what was your biggest mistake as a beginner investor?
So my biggest mistake as a beginner investor is I feel like I started trading before investing. So I started learning trading first, meaning short-term day
Right?
trading. And then as I kind of got through my, investing or my trading career, I moved into investing, which is the long-term swing trading, investing for the long haul type of stuff. And I found way more success with the swing trading and the long-term investing than the short-term day trading stuff. And I if I would have spent that time, in those stocks, in those long-term investing stocks, way back when, they could have been compounding all this time, right? So,
Yeah.
I would have liked to start my actual long-term investing journey first and then moved into the day trading. Get to know the market a little bit, get to know how it works, how price moves, before getting into day trading. Most people do it the other way. They
Right.
go day trading first, then finally they're like, okay, I'm going to start investing.
Why do you think was that? Because I'm guessing in the day trading, I've been attracted to it. I haven't been involved in it anyway, but it sounds like more immediate, like you see results right away. Maybe that's like one of the
Yeah.
reasons.
Yeah, a lot of people like it because it's fun. I mean, let's get real. It definitely has some characteristics about it that some people enjoy. Some people find it extremely stressful. I have ended up being one of those people that I was like, I can't sit in front of this computer anymore because I was sitting in front of the computer all day, every day, and it was just too much. Um, and it's quick, quick results potentially, but a lot of people also lose money because they don't really know what they're doing.
Right.
And if you make a few trades and you do well, you feel like you've got it all figured out. And then the market just slaps you in the face one day and
Yeah.
you learn the hard way.
As it usually happens,
Yeah.
especially nowadays. And what if you had to start over after you've had all this knowledge, all this experience, and you scratch everything and you have to start over? What would you do first and how would you start?
I wish that I would have been taught at a young age about investing
Mhm.
in the stock market for the long haul because when I was in high school, I could have been putting money into ETFs, or in college, I could have been, putting money into ETFs, and I would
I'm,
have had a lot more money than I
I'm,
do now.
I'm feeling absolutely the same.
Granted, we've done all right, but man, if I would have just had, a little bit more time on my side instead of spending money at the mall, just reckless spending that you look back and you're like, why did I do that? I that was just a waste of money that could have been compounding.
Tell us an example of reckless spending that you had.
Oh man, so I used to go to the mall every weekend and buy a shirt from Hollister or Abercrombie, and I just had a closet full of clothes. And it for what, right? Like, imagine if I would have bought Apple stock every time I wanted to go to the mall and buy a shirt, right?
Right.
Man, imagine that. But hey, you're young, you don't know. And this is why financial education is so important at such a young age. And I'm very encouraged by a lot of the young people that are coming across my path that are interested in this stuff. So that's something to look forward to.
Yeah, I actually see the trend too, and that's why I wanted to create all those videos because I see a lot of people asking me about this in like 20, 25-year-old friends that I have. And I'm like, great, that's, you're like 7 years in front of me or something like this. And I'm so excited to share everything. And thank you so much for spending the time with us and discussing all those things. I'm sure it was very useful and valuable for everybody watching.
Oh, no problem. I'm honored to be here. Thank you for having me.
It's my pleasure. That is everything for this video, guys, and I would like to thank Nikki one more time. She's part of what I call the value economy. She has provided incredibly valuable tips for all beginners investors out there, completely free of charge. Now go out there, give her some love on She Talks Finance channel, and I'll see you in the next one. Ciao!